So you want to find out what's really happening in the real estate and financial world? Well, it's a good thing you tuned into the National Real Estate Cafe with Don Gatling and Gino Franti. And
I wanted to point out that what you could do is you could go to donandgino.com. It's our hub, and you can get not only the National Real Estate Cafe, you could look back at 2, maybe 3 years of National Real Estate Cafe, but you could also look at 7 years of the Don and Gino Real Estate and Finance Show. So there is a wealth of information on real estate, finance, and so much more, because our goal is always to guide you to personal and financial wellness.
All right. That being said, let's go to this first slide. What are rates doing today?
As you like to say,
beep. Yeah, because you're hearing how rates are going up only because the feds are raising short-term interest rates. Again, I always say credit cards,
home equity lines of credit,
car loans, and
home
so
equity
forth.
lines of credit is probably the one where it has the biggest impact, though, because you have the largest loan amount.
Absolutely. So, but it doesn't affect mortgage rates. And you can see that rates were even higher back in the middle of May. And they've improved since then. And then in the last, almost 2 months, the last month and a half, they've been flat, right in the upper 4s, low 5s. So rates are still great.
Okay, so let's talk about that for a second. The reason that's happening is there's some uncertainty about the future. And there's 2 reasons there's uncertainty about the future. One of them is the trade war escalation, potential trade war escalation that's happening right now.
And that's a big one.
It's a huge one.
Right.
Because what it does is it reduces the confidence in certain companies on what their profits are going to be. So that
costs.
That could potentially
cost equals profits, right?
Yeah. So that could potentially depress the stock market a little bit. So, those are things that are being looked at. So there's just a little bit of caution. There's no fear or panic, just a little bit of caution there. So some people are flying to safety and staying in bonds instead of just going foolishly after money. So I think that's healthy.
I agree.
It's keeping the stock market rational. Taking away the exuberance. Good. It's a good thing.
Yeah.
The other thing that's interesting is this theory of an inverted yield curve, and that's why you're seeing these flat interest rates. Because inverted yield curve is when the feds are raising the short-term interest rates, but the long-term rates aren't going up with them. They're staying flat. So you've got what's called when it inverts, you've got the inverse yield curve. If you get an inverse yield curve, every time we've had an inverse yield curve, you end up in the R word.
Recession.
That's right. So there's a little fear of a recession in the future. Talking 2020, 2021. We're not talking about next week. But those 2 things are what's keeping long-term rates at bay.
And recessions aren't bad things. They're the same thing in the stock market, the same thing in our bond market. It's called a correction. And they're sometimes healthy. It's not a crash. That's a big difference.
Yeah, we're not expecting a crash. We're expecting a recession. And recessions have to happen.
Right.
They're a necessity. And so it won't
take a
be
breather.
A bad thing. Yeah, it won't be a bad thing. Hopefully it won't be a bad thing. I mean, depending on, as we talk about on the radio show, there could be a big catalyst and then it could be a crash. But we don't see that on the horizon. Everything looks good. Employment numbers look good. Inflation's a little bit high. That's the other thing.
That's why you need to take advantage of the rates where they're at now. If inflation continues to check up, rates will go up, plain and simple. So take advantage of it now. You heard it right here on the National Real Estate Cafe with Don Gatling and Gino Franti. And find out more at donandgino.com.